Hello friends, welcome to URS Academy. Today we'll understand goods and services tax. This will be the first lecture of a two-lecture series on understanding goods and services tax. In this lecture, we'll study three important questions. First, what is GST? Number second, why? That means why we need new system of goods and services tax if we have an established system for collecting indirect taxes. Number third, how it will be implemented. So we'll deal with these three important questions in this lecture. So before I start, let me introduce myself. I'm Dr. Bilal Ahmed Bhatt, silver medalist, Junior National Olympiad Mathematics, qualified JKCET IEEE 24 state rank, qualified for UPSC May 2015, and well, I'm a working professional. So we'll start. What is goods and services tax? Goods and services tax is one indirect tax for the whole nation. Theoretically, we say it, that's one indirect tax for the whole nation, but practically there may be slabs as well, that there may be multiple taxes. So since it is an indirect tax, so let's understand what is indirect tax. It's a type of tax collected by government from an intermediary, such as manufacturer or retailer, not final consumer. That means the taxes are collected through intermediaries. I'll give an example at here. For example, we purchase a product from a retailer or wholesale dealer. We are paying to him, but we are not paying taxes to government directly. But it is through the retailer or wholesale dealer that the taxes are collected by government, through them. So these are collected indirectly, there is no question about that, through intermediaries. Okay, levied on goods and services, levied on goods and services, not individuals. On individuals, there is a new system, that is direct taxation system. That is, the taxes are collected directly from the individuals. Under this taxation system, there are, like, for example, income tax. I'll say income tax. Then we can say corporate taxes, then wealth tax. Okay, these are direct taxes imposed on individual, but on goods and services there are indirect taxes. So what are the different categories of indirect taxes? Those are like on manufacturing there will be excise, central VAT. On import export there will be customs duty, countervailing duty. Sales, it will be VAT, central sales tax, stamps duty. Okay, then services, service tax. We are not going to discuss these taxes at here. We'll deal with these topics later on in our economic classes. So these are the various categories of indirect taxes which are presently prevailing in our indirect taxation system. So what government intends to do, they want to subsume all these indirect taxes into one tax, that is goods and services tax. At present, these indirect taxes are levied on clearance of goods and services from the origin. What does it mean? It means these taxes are levied once the goods moves out from the stock. That means once the goods are produced, and when they move out of the stock, they will be taxed, irrespective of whether the goods will go out for further value addition or not. What is GST here? What is GST? It is one indirect tax for the whole nation. I already told, one indirect tax for the whole nation. What are the various taxes that will be subsumed into GST? There will be central and state taxes. We know there are different levels of taxes in our country, central, state, and including other local taxes as well. So under central there will be excise duty, additional excise duty, countervailing duty, special additional duty of customs. These taxes will be subsumed in this one tax, that is goods and services tax. And state, there will be a state VAT or sales tax, central sales tax, entertainment tax, other than imposed by local bodies. That means those which are with local bodies, they will be left with them. They will not be included in GST. Okay, octroys, purchase tax, tax on lottery, betting and gambling, these taxes will also be included in GST. So it's a single tax, not a single point taxation system. That means this type of tax is not collected at a single point. It will be collected at multiple points. We'll understand it because it's a tax on, it is a tax like VAT, value addition. We'll understand it. Imposed on the supply of goods and services, right from the manufacturer to the consumer. I already told it's a tax on value addition part, so it is taxed at multiple points. Essentially tax on value addition, okay, at each stage. Theoretically, the final consumer will bear only the GST charged by the last dealer. Theoretically, we say it, but practically it is different. That it is the final consumer who will pay whole of this taxation burden. We'll understand it in the diagram that I will show you at here in the next page. Okay, so how it work? It will work based on the principle credit of input tax. Sorry, here it will work on credit of input tax paid at each stage will be available in the subsequent stage of value addition. That is, we'll understand again. I'm sorry, please remember this statement. I'll make you understand it in the fig. Okay, so how GST will be implemented? It will be administered at three levels: central GST, state GST, and integrated GST. Central GST, that means center will collect this part of GST, state will collect this part of state GST, and integrated GST is different from center and state. It will be imposed when there is interstate trade. Okay, interstate trade. Okay, interstate trade, and import export. Okay, import export. Okay. So this integrated goods and service tax will be collected by center. Okay, in this integrated goods and services tax, there will be two components: central GST and state GST. Okay, state GST. But both of these taxes will be collected by center. These will be collected by center. This is an exception under this IGST. Otherwise, state GST are collected by states, and central GST is collected by center. But here state GST part is collected by center, and then it is given to the state in which the goods are imported, not to the state in which from which the goods are exported. Okay, we'll understand it here. You will understand it here in this example. Let's see here in this diagram. This is a diagram I have got from PIB site. That is a very nice site, and please just follow the PIB. You will see very awesome articles on that. And this fig I have got it from there because it's a very perfect example to understand it. So this is a dual GST within state. Okay, within state there is dual GST, that is central GST and state GST. Okay, so here, for example, a timber maker, he makes timber from the wood, and when he makes the timber, he makes value addition to the wood. I already told that GST is essentially a tax on value addition. So it is like value addition, like VAT. So since he makes timber from wood, it is value added to the wood, and this timber maker will be charged at the rate of, for example, we say at the rate of 10% CGST and 10% SGST. That means rupees 10 and rupees 10 per rupees 100. So that means finally he has to pay finally the cost of the product will be 120 rupees. This timber maker will pay 20 rupees to the government, 10 rupees, sorry, here you'll see the timber maker will pay 10 rupees to state and 10 rupees to the center. Okay, at the rate of 10% SGST, 10% CGST. And then he will charge this tax to from the furniture maker. That means if including profit is this timber will cost 100 rupees and plus 20 rupees the taxes that timber maker will pay to the center and state, that means he will charge 120 rupees from the furniture maker. Once again, the furniture maker, for example, makes further value addition of rupees 100. That means it will cost again 220 rupees. 220 rupees because he has purchased this product at 120 rupees from timber maker. But what government does, again he has to pay the tax at the rate of at the rate of 10% to CGST, 10% SGST. So that, but he will not pay the tax at the rate of 220 rupees, but he will pay the taxes to only the value added part, that is 100 rupees. But how it will be done, I'll make you understand here. Here, if we'll see the value of the product, it is exactly 200 rupees, excluding taxes, since 20 rupees were taxes charged by the government to the timber maker. So exactly the value addition till here at the furniture maker is only 20 rupees. So the taxes will be at the rate of 10% CGST, 10% CGST will be 20 rupees, 20 rupees, 20 rupees. So there will be 240 rupees. But again, it will be tax on tax, because timber maker has already paid 10 rupees to center, 10 rupees to state. So this furniture maker should be taxed only on rupees 100. So how it will be done? The taxes which already the timber maker has paid to the center and state, those will be debited to the furniture maker. That means 10 rupees by center, 10 rupees by state. Okay, 10 rupees by each will be debited to him, and finally he pay the tax on 200 rupees at the rate of 10% will be 40 rupees, 10% SGST, 10% CGST, that means 20% of tax. That will, he will pay 40 rupees of tax. So the final cost of the product will be 240 rupees. That will be charged by furniture maker from the furniture retailer. Okay, fine. Again, furniture retailer, for example, made for the value addition of rupees 100, that means 300 rupees at the rate of 10% SGST, 10% CGST will be 30, that means 60 rupees tax, 360 rupees tax, sorry, 60 rupees tax. So the total cost of the product will be 360 rupees, which will be charged from the final consumer. So finally it is the final consumer who pays whole of the taxes. But here again, if he is paying 60 rupees to the government, but he has to pay the tax on value addition part, only on the value addition part, that's rupees 100. So how he will pay? The 40 rupees paid by the furniture maker, 20 to center, 20 to state, will be debited to this furniture maker, and then only he will pay the taxes of rupees 60 to the center and state, 30 rupees to center, 30 rupees to state. Okay, so we can understand from this figure that it is the final consumer who actually pays the whole of the taxes, but it is taxed at multiple points. But finally the whole of the taxation burden has been forwarded, that has been beared by the final consumer. So let's move next. So we know CGST, that is Central Goods and Services Tax, will be levied by center, okay, on goods and services across the country. SGST obviously by states, but within their jurisdiction. Liability of credit, that means who will pass the credit to the next value addition for to the next level. It will be basically the center part of the taxes will be paid by the center itself, and states will pay their own part. So the liability of credit on input tax will be discharged by state and center in their respective jurisdiction. So cross utilization of credit on input tax is not allowed between center and state. Cross utilization is not allowed. It will not be allowed, even it is not justified, because if center is collecting its own taxes, state is collecting its own taxes, so how center will pay the taxes for the state, and state will pay the tax for the center? So it is common sense again. So central goods and services tax and state goods services will be levied on goods and services on the same value. Here please understand this, on the same value. What does it mean by same value? If we'll see the currently prevailing system, center, for example, a good is manufactured, so what will happen? Center will levy an excise on it. Finally, when that will come to the states, state will levy sales tax. But on which value the state levy the tax of levy the sales tax? It will levy including the excise. So the taxes are levied on different values. Central levies on some lesser value and state levies on some higher value. So these are taxed at different values. But under GST, these taxes are levied on the same value that I have explained in that diagram, if you understand that. Okay. So presently state VAT is levied on the value including central excise. I have given an example here. I explained it. Cross utilization of credit for goods and services is allowed in CGST and SGST. You see, I said cross utilization of credit is not allowed between CGST and SGST, but cross utilization between product, but within CGST and SGST is allowed. However, cross utilization between CGST and SGST is not allowed. I already accept, except in case of interstate supply of goods and services tax. Under interstate goods and services tax, I have already told that that is collected by center, and then finally even SGST part of the IGST, that means state goods and service tax part of the integrated goods and services tax, is collected by center, and then later on that is given to the state. So it is an exception. You will see integrated goods and services tax, how it will be exactly implemented. Okay, center would levy and collect it on the transactions of interstate trade of goods and services tax. I told it again, center will levy and collect. Okay, IGST is equal to CGST plus SGST. I already told. Now here interstate flow of credit of input tax takes place. Interstate flow of credit of input takes place. How? I'll explain in next diagram how interstate flow of credit takes place. Exporting state to center, how it takes place. Exporting center to state to center, then center to importing state. I will explain it. It is a, please remember this first, and I will explain in next fig. It is a destination based tax, so all SGST on the final product will be accrued by the consuming state. Please remember, countervailing duty and special additional duty will be included in GST. The state which consumes the importing goods will gain the benefit of SGST part of IGST. Please understand these things, what I mean to say. I'll explain it in this fig. Please cooperate. Here, integrated goods and services tax. Okay, so here we take an example here. For example, there are two states, state X and state Y. Okay, there are two states. For example, this furniture maker that I already given an example here, furniture maker and furniture retailer. Furniture maker is from state X and furniture retailer is from state Y. So here we know that he made for the value addition of 200 rupees, 100 rupees, but total cost will be 200 rupees, and finally he has to pay the tax at the rate of 10% CGST, 10% SGST, that means 20, that is 40 rupees to center and state. But this 40 rupees will be charged under IGST when there is interstate trade of good. For example, the interstate trade is in this direction. That means 40 rupees will be all the 40 rupees, that is tax on the 200 rupees. Tax on the 200 rupees, not only the value addition part, but the total tax will be collected by center, not by state and center, because SGST part is collected by center itself. So that will be collected by center. And what will happen? Center will give the SGST part of the IGST to the importing state, that is state Y. Okay, not to the state X. Then what will happen? Soon as this furniture retailer will sell this product to the final consumer, and final consumer will pay the taxes. For example, again that will be 300 rupees, 60 rupees. Total taxes paid by the final consumer will be 60 rupees. But furniture retailer has already paid 40 rupees to this furniture maker, and these 40 rupees were paid by this furniture maker under IGST to central government, and this central government will transfer the SGST part to state Y. And state Y, what will state Y will do? State Y will transfer the liability of the input tax to furniture retailer, and center will again transfer the credit of input tax to the furniture retailer, that is 40 rupees, and 60 rupees will be appropriated from this consumer, and in net he will pay the taxes for only value addition, but it is the final consumer who will bear the burden of whole taxation again. But here we'll see which state will be benefited under this GST system. Under this system, only one state will be benefited, that the state where the consumption of the product takes place. Okay, that means state Y will get benefited, not state X. Even if the product is manufactured in state X, but finally the product is consumed in state Y, so the state Y will be benefited. That is, it is a destination based tax, it is a consumption based tax. Okay, thank you. Hope you enjoyed watching this video. Please don't forget to subscribe and like our video.